Mr. DP Singh joins us now, represents SBI AMC. It's a phase where right now mutual funds are finding it very, I won't use the word easy, but they are finding it rather a good experience to tap into the retail appetite for equity as well as balanced products. And in the latest offering, the NFO of a balanced advantage fund, SBI AMC has just raised a record 12,000 crore. Mr. Singh, good morning. Thank you for joining us. The balanced advantage fund is a very unique category. Typically, the way Indian investors have invested is that they've always liked either large cap or small cap. But now the balanced advantage scheme, a single scheme, has mobilized 12,000 crore. When you launched the scheme, were you anticipating this kind of a response?
Honestly speaking, not that much, but we were definitely expecting 5-digit. So this the reason was that there's an appetite in the market, and people are looking for some attractive options which are having the inbuilt solutions. So balanced advantage fund comes very, very handy, that which is a product as well as a solution built in the product itself. I think that did the magic, because that takes away the navigation from debt to equity, so on and so forth, from the hands of investor to the fund manager. I think that's something people were looking at, and the tax efficient solution. That's why people have come from all across the country.
Historically, when mutual funds have gone to the market to raise money via the NFO route, the large amount of mobilization has happened in the top 25 to 30 cities, not even tier 2. It never goes outside 25, 30 cities. Has this product offering been different? Have you got a sense that collections have gone to outside these 25, 30 cities which traditionally have been investing in AMCs?
Yes, definitely. I mean, I'm very happy to share with you that we would have got the same money from Northeast as we would have got from Mumbai. So that's something which has happened. That's just an example. This has been all across. Every nook and corner of the country has contributed. This is not at all a metro-centric fund. But it's other way around. More money has come from the smaller towns than the bigger towns.
How will investing in balance advantage fund be applicable in this environment? Because interest rates are likely to move higher, which is that on the short term paper you may not get great returns, and equity market valuations are also looking slightly stretched. So do you think a balanced advantage product will work this time and this kind of an environment?
It should work, because we have done a lot of hard work in this, and we have created a 2-3 models. One is, of course, on the quant side. The second is the sentiment index, and third, Nikunj, you will agree that even in the costly market, there are opportunities. And we, as a fund house, when we are managing more than 300,000 crores of equity assets in our fund house, we have a great team. We have the bottom-up approach. We know that there are companies where still the valuation is attractive, and moreover, we are not going to. The model tells us how much to put in equity at the point of time. For example, at this point of time, our model is telling that we should not be more than 30-35% into equities. The remaining around 35-40% will be in the arbitrage category, and around only 30-35% will be in the debt. So I know it's a challenging time when the equities are costly, interest rates are likely to move up. It's very, very difficult to create a portfolio. But over the medium term and long period, we are very sure that we'll be able to create value for the investors.
Okay. So, Mr. Singh, the best part about the Balanced Advantage Fund is that you do the job of asset allocation, for the retail investors, those who probably don't have the time or the wherewithal to go about, deciding how much in equities, how much in debt, gauging the market conditions. So, what, you mentioned that your model right now indicates that maybe it's time to trim a little bit from equities. If you could tell us what are the parameters, put inside in your model that helps you determine how much should be equity allocation, how much should be debt allocation for the fund?
Yeah. As I told you, there are three models working. One is the quant model, which definitely tell about the momentum, how the momentum is going in. And the second new one, which we have brought in, is the sentiment index. And third, we are perhaps the first fund house in the country. We have created a asset allocation committee consisting of our CIO as well as our strategist, Gaurav Mehta, who has come with the experience of asset allocation funds. And we have a committee of 4 members, which meets every fortnight and decide what should be the asset allocation at this point of time. So this is the job of today, as what I'm telling you about 35%. This is a combination of all these quant model and say this sentiment index, as well as the asset allocation committee approach, which has come to a conclusion that at this point of time, it should not be more than 35 to 40% in equities, and that too a mixture of large cap, mid cap, small cap. So that's how it's working. Quant model actually it's a typical model where on various parameters. Actually, when we see earlier filed our fund, this explaining this model to SEBI itself took various months. So, but that has worked in our earlier of the dynamic asset allocation fund. So I think it should do well. But in any case, we have 2 more models working over and above this. So we should be able to create value for sure.
Okay, so seeing as right now your model is indicating that perhaps you should lean more towards the debt side, I would like to know what would you look at in your debt portfolio? What sort of instruments would you include? If you could share a little bit on that front.
Immediately, it will be on the short-term, short duration papers only, as Nikunj was also suggesting that. And see, we know there's a unanimity that interest rates are likely to move further up from this level, so we'll not take any duration call. But will definitely some portion of it we can put in high yielding SDLs, etc., because that over the period of time that will give higher yields to the portfolio. It will be a mix and match, but mostly towards the debt, short-term debt instruments for the time being.
Mr. Singh, a lot of other AMCs are also looking at, or rather they've raised money in the small and the mid-cap schemes also about 2-3 months ago. And then small and mid-cap stocks have only corrected after that. Do you see there is merit in coming up with an NFO or a fresh offering in that space?
I don't think so, honestly speaking, at this point of time. In any case, in small cap fund, the opportunities are very, very limited, and with the restrictions which are there by SEBI, I think space itself is very, very crowded at this point of time. So I will not. I mean, if we have to file a paper or if we have to come out with a fund at this point of time, we may not come for a small cap fund.
So what kind of innovation should we expect from SBI AMC in terms of a new product offering, in terms of new schemes? Should we expect anything substantial in the next 2-3 months?
Not really, Nikunj. In fact, this balance advantage category was something where we were not there in that space. Because as per SEBI, either we can have dynamic asset allocation or we can have the balance advantage. This is bracketed category. And we had dynamic asset allocation fund, but that fund was not clearly telling whether it will be equity category fund or debt category fund. So the people, I mean, the investors at large, they were looking at something in the equity category. So we just merged our dynamic asset allocation fund, with our debt hybrid fund, and we came out with this. In this category, in any case, a large category. It's already 1.3 lakh crores category, and we are happy that we are entering the category with 10% market share. So that's something gives us a solace. But see, the basic idea was to take this kind of fund to the every nook and corner of the country and get new investors. That is what is challenging for the industry today, that we are not getting new investors. Our endeavor is always how to create market. Since we are the leader in the mutual fund space, we feel that this is our responsibility to create market. So others will go, and we are very, very happy Last time, as I told you, when there's not even a single state of the country which has not contributed meaningfully in this fund.
Fantastic to hear that. That's what we always urge on television, that you have to check your asset allocation. Equity investing is also about wealth creation and asset allocation. Mr. Singh, every time when I speak to Mr. Khara, the chairman of SBI, on SBI Mutual Fund listing, I always get a very emotional response, because he was running this business a couple of years ago, and the response is, we are looking into it and we will go public at the right time. Isn't this the right time to go public, when markets are at a bull run? Suddenly you got 3-4 AMCs which are already listed. Birla is planning to go public. When will India's biggest AMC go public?
See, I cannot say anything more than what Mr. Khara has told you. Mr. Khara is the mentor, guide, friend of SBI Mutual Fund. As you rightly said, he feels very emotional about SBI Mutual Fund because he started the business going up from scratch. In fact, when he joined this company, we were around 60,000 crore AUM, and today we are almost 6 lakh crores AUM. So that's why as far as right time is concerned, I think this is the decision to be taken by SBI and Mundi together. Mundi being joint venture, they are also very, very active in our working. And I can only tell you they are discussing about the right timing, and I can't indicate any time frame, but they are. This is definitely being discussed. That's what I can say.
Mr. Singh, last question. You are managing about 6 lakh crore. When do you think that 6 lakh crore will become 10 lakh crore? 3 years or before that?
Became 1 lakh crore company in almost 27 years of our existence. And next 5 lakh crores have come in less than 3 years. So that's, if 30, and from 5 lakh to 6 lakh crores journey will be almost 7 months. So I can't say anything. I think it can be 10 lakh crores very soon, sooner than what we expect. But I will not put a time frame for more than 2 years, maximum 2 years.
As you give me a headline, I can imagine that how interesting things are happening in the mutual fund industry. If the biggest player is confident of becoming 10 lakh from 6 lakh in less than 2 years, clearly not only achhe din are back, achhe din are here to stay. Can I conclude by saying that?
Thank you very much. Yeah, Nikunj, this is definitely there. And one thing I will tell you, more and more people are now entering into the bandwagon of mutual funds. But the only issue is the retailization is something which we need to happen, because even if we look at the NFOs which are coming either from our fund house or any other fund house, only the affluent are being serviced by the distribution community. The mass affluent and middle class is yet to come in. I think we need to discuss about that. We are very, very concerned about that, and we'll definitely, discuss with regulator also. Even in this fund, our ticket size, average ticket size is more than 3 to 4 lakhs. So that's something. But there's a huge pyramid in the 50,000 to 2 lakh category. I think we need to do something as an industry to attract that pyramid. That's very, very important.
Let's make it happen, sir. We are all for supporting Indians to become better investors and create wealth by this wonderful platform called mutual funds. So I look forward to more engagements both on the record and off the record with you, and let's work together to make every Indian reach their financial goals. Let's take a break. When we come back.
Thank you very much, Nikunj.
More on markets, and we'll extensively talk about pharma, which today seems to be bouncing back.